Thinking Byzantine here, and today we'll be talking about the All-Weather Portfolio by Dalio. Now, for a quick disclaimer, I am not a financial advisor. This is all my own opinion. Your investments are your own responsibility. The information that I'll be using was from Jan 2nd or before. And now, what is the All-Weather Portfolio? The All-Weather Portfolio was created by Dalio in an attempt to create a portfolio that performs in any economic environment, whether it's a bullish or bearish market, or an inflationary or deflationary environment. Now here's the location of the all-weather portfolio. We got 40% into long-term US bonds, 30% into US stocks, 15% into US intermediate bonds, 7.5% into gold, and 7.5% into commodities. And you can use TLT for the long-term bonds, VTI or VU for the US stocks. For US intermediate bonds, you can use IEF. For gold, you can use physical, or you can use gold ETFs if you really want to. And for commodities, we'll be using BDC. Now, here are the principles behind our all-weather portfolio. Like I said earlier, the goal was to create a portfolio that performs in any environment. So we have inflation, deflation, bullish, and bearish. And each section of this portfolio does well in certain environments. Like stocks do well in a bullish environment, commodities do well when there's inflation, and when there's deflation or the market's bearish, bonds do particularly well. And each allocation of this portfolio is based on the frequency of each of those four factors. Now, here are the pros of an all-weather portfolio. It's easier to manage than stock picking, and it's a bit more stable than an index fund. By that, I mean it has steadier growth and lower downturns. Now, to me, the concept of all-weather portfolio is its low growth compared to riskier investments. So there's an opportunity cost that you have to weigh in. Also, I believe this portfolio is susceptible to a rapid increase in interest, as a lot of this portfolio is made out of bonds, and when interest increases, bonds usually lose their value. And another weakness that could be easily remedied is that in Dalio's all-weather portfolio, there are no international stocks, though some US stocks that are big, like Microsoft, Apple, they all have some operations outside the US. Now, here's the performance of the all-weather portfolio versus the S&P 500 from around 2007 to now. So basically, in 2008, the all-weather portfolio did fine compared to the S&P 500. There's a lower drop, as you can see here. And when the COVID panic happened, the all-weather portfolio did not drop much in comparison to the S&P 500. And in fact, this portfolio seemed to be outperforming the S&P 500 till around 2017, where the stock market started to ramp up and US stocks have been outperforming the all-weather portfolio since then. And from these numbers here, the CAGR is around 8% compared to S&P 500's 9%. Its best year was around 18% compared to S&P 500's 32%. Worst year was only around 3%, which is a lot better than the S&P 500, negative 37.02%. And the max drawdown is a lot lower too, from around 12% to negative 51%. So what you can tell with the all-weather portfolio, that it was designed to have a good risk-reward, if you know what I mean. And we can use the Sharpe ratio, which measures the risk-reward factor of a portfolio, and the higher the Sharpe ratio, the better. And as you can tell on this 14 year time scale, the all-weather portfolio has a better Sharpe ratio. Now, should you use an all-weather portfolio? It really depends on your goals. If you're seeking steady growth with low downturns, and you don't have all the time in the world to do stock picking, but you do have enough time than just say doing a 3-fund portfolio, then this could be for you. And I guess this portfolio works well with people um, who are not seeking high growth, but just steady growth, or those who are older and closer to retirement who don't want to see their investments drop 50% in a year, like what could happen to some stocks. Now, with all that out of the way, please like and subscribe to my channel and tell me, what do you think of the all-weather portfolio?